Is 40 stocks too many for $60,000? This is outside my 401k, by the way. Many of the stocks are in the $500-$1,000 range, ones I like, use, or think might hit someday, with 5 or so in the $5-6K range. Many different sectors, usually 5-6 top per, maybe a few more tech. I've been investing, trying all different strategies I can think of aimlessly to learn something that works for me for few years, short of a decade now, and am still green. At certain times I've been destroying the market and pulled profits, but now am similar to VU. I've been trying to trim, but it just feels stressful to do so. I don't like the idea of ETF fees. I've done some small option trading this year that has not paid off like previous years. Edit all these responses and insight is great. I am sure many of you have been doing this much longer than I have. I know this isn't a one-size-fits-all situation, so it's great to have some things to follow up on and consider. I do agree that maybe it is too much to have on my plate for a long period, and I'm going to try to find ways to cut my number of holdings a bit further. Shit, if you're loading up on that many stocks, just get an ETF. I'd try peel it back to 30, trash some of those $500 positions. Yes, do you have time to research and update 40 stocks? I don't like the idea of ETF fees. Why not? Broad market funds nowadays are 3 basis points or less. So you get, say, the 500 index or total market for a whopping $3 per every $10,000 invested. Your OP mentions how complicated your managing of the 40 stock portfolio is getting. So why not go with an index fund for no management required? No, too few. You should have at least 500. 40 is too many for any amount of money. Zero chance you can keep up to date for more than 5. You need to develop a strategy. Have a core position of investments that you invest in, not trade. And then your trade positions are more fluid. Also, diversifying is good, but at some point it's just redundant. For example, I'm not buying both Visa and MasterCard. For the most part they move the same. Or Cheesecake Factory and Texas Roadhouse. You get the picture. I'd have no more than 8-12 stocks. Everyone seems to think you have to actually keep up with every stock. I don't believe this. If you think a stock is a good investment for the next 10 years, buy it, hold it, and forget about it. I've got about 120 stocks and have consistently beat the market. I build on good performing stocks and occasionally trim the bad ones. Diversification maintains wealth while concentration builds it. Warren Buffett. Find out what you want to do and act accordingly. Yeah, about 35-37 too many stocks for that amount of cash. Yay, just buy the SP. If there are dupes, need to consolidate them. 1500 seems to be a big small. 40 is insane, lol. How do you understand so many companies? Yes, that's too many. Yeah, I think so. More doesn't always mean better, and if you want exposure to a lot of stocks, you could just invest in an index. Do you want keeping an eye on your money to be a full-time job? If not, just put it all in 1 or 2 index funds. Ideally with a portfolio of $60,000 and assuming you can afford the risk. Should have maybe 6 or so stocks. No ETFs. DYOR and identify the stocks. If you just do the sub-favorite VU, you will never beat the market and you will miss all the biggest gains. IMHO with $60,000. You should be taking some risk. To each their own. At 40 stocks, sell them all and buy VU. Just buy the Dow 30 and sell off losers before year end if you want a lot of stocks. Yes, you're basically trading your own index fund without the benefit of an index. It doesn't matter, but you should just do QQQ and a little VTI. I have been considering the same question and was going to ask soon. I have $15,000 invested across 10 stocks. Some value, some growth. Give or take $500 difference between them all. I've invested in things I like. And taken some risk with other and then the safe 2 picks. I think I'll continue to average down over the years with these 10 and maybe add one every year or so. Comparing what I'm aiming to do versus scaling up to your level. It seems like a sound strategy. Yes, this is way too much. With only $60K, I'd reduce it to like maximum 10 stocks, with 2 being ETFs like SCHD and VU. Then up to 6-8 individual stocks. I agree with several others that 40 is too many. I think the sweet spot is 12-15 positions, with individual stocks being no more than 20 of your total portfolio. Personally, I'm about 70 indexed. 15 low-cost actively managed funds and 15 individual stocks. 4 stocks are too many for $60,000. If you have time to read and understand the 10K and 10Q and understand the complete story of all 40, then go for it. If you can't, which is likely the case, it would be a safer bet to just buy an actively managed ETF or mutual fund. Better to keep the best tickers you got and work the options upon them. I have 2 ETFs 70-30 with $550,000, but you can do whatever you want. Yes. I could imagine having that many stocks to monitor. But I'm a deep diver who only has 4 at a time normally. You don't like ETF fees? You can pay 0.04 for an ETF. That's $4 per $10,000 per year. Yes. Far too many emo. I'd stick to 10 or less so you can take time to understand each company's balance sheet and keep up with news and rumors. I personally only have 4 or 5. May as well have bought an index fund. Why does no one ever short the market? Spotting bubbles that are gonna burst is way easier than picking the 300 in a billion companies that will do well this year. Yes, you are not managing an ETF. 500,600 approximately equals 0.8. If one of the $500 investment were to double, your portfolio would grow less than 1. I'd rather reduce said investments and concentrate in high conviction stocks, or just put those funds into COVALENTS 1P500. You should have like 5 stocks max. Get some ETFs since you want diversification. How would you know these 40 companies well enough to make decisions on? I don't have enough time following the 10 that I currently. Surprised by a lot of the comments here. If you want diversification, you might as well just buy the index. You'll spend less on transaction fees. And there is absolutely no way you can understand 40 companies sufficiently to own them. If you want outperformance, own 5-8 companies you know intimately and are the best you can buy. Funds own 40 stocks for 2 reasons. They have a lot of analysts who spend their whole time analyzing, but mainly because investors don't accept a fund that only buys and holds 5-8 stocks. They also mostly underperform the index and cost more. Short answer to title: yes. Yes, at that point just put it all in a market index fund. Yes. Far too many. How will you keep track of them all? What rules do you have to cut losses? Take profits? Over-diversification can hurt returns for various reasons. Is there any reason you really think all 40 of those companies are good investments? Can you find the 5 that are your favorites?